Hello, good evening, guys. Welcome to my channel. This is Forex Success Academy. So, today I'm just going to be talking about liquidity. Actually, liquidity is a kind of a broad topic, right? So, I don't want this video to exceed 25 minutes. So, once it exceeds 25 minutes, I will stop from where I will cut from where I stopped, and then continue some other time. So, I will teach you guys liquidity today. It's actually a broad topic and a really challenge to Forex trader, especially the beginners, right? So I'm gonna explain everything quite well here. So just follow me slowly, you will understand it, right? So if you are watching us for the first time, please ensure to subscribe to the channel, subscribe so you can help us make this video reach more people, talking about more investment. So let me, okay, let's just get to a new chart. Let's get to a new chart, start. Everything I clear. All right. Okay, when we talk about liquidity, we have about five or types of liquidity. There are five types of liquidity. We have the equal highs liquidity, the one we assumed. Simply put, first of all, simply put that liquidity are trap zones. Okay? Liquidity are invalid zones. Liquidity are invalid zones where you enjoy your order block, right? At the end of the day, you get stopped out of the market, and maybe the market needs to go to your direction, but then you must start taking out, right? So they are invalid zones, they are trap zones, right? So now in your normal trading, those who trade chart patterns, you have what you call the double top, double bottom, right? Yeah, that's what I mean by equal high liquidity. Liquidity that occurs at this double top, right? And then you have double bottom, that is the equal loose liquidity, that is the that occurs at this double bottom, right? So we also have trend line liquidity. There are a lot of charts you see, like my chart. I do use trend line in making my analysis. So most of the time, you see that the price is not expecting that your trend line. At some point, it might break your trend line, and you assume that there is a change of character coming. At the end of the day, it will go below it, expecting that trend line. That's trend line liquidity. We have buy slide liquidity, and then we also have the sell slide liquidity. Buy slide liquidity, you're trying to sell at the wrong zone and you're taking out. Sell slide liquidity, trying to buy at the wrong zone and you're taking out. So all that I will demonstrate here, right? So we are taking the first one, which is equal high liquidity. So I'm just going to make it quite simple. So let's normally when you say equal highs, sometimes when actually the chart pattern, you see price dropping something like this, and at the time there is change of character, and then price coming up, right? And when you see price coming up, okay, let me just do this once. At the point you saw price around this area, you went to draw your order block, right? You drew your order block. So, and the anticipation is when price gets in here, you short, right? You, okay. You have to see. So during your order block, you're waiting for price to tap into this zone, and then you short. Sorry, you short. Now having your stop loss just below, I mean just a little above the trend line. Sorry, above the order block, right? Now, when I say liquidity now, talking about the what do you call it again? The price, the equal highs liquidity. Now, most of the time, price gives you this structure and you make profit from it, right? But when you keep on doing it every time, right, you see, it doesn't work all the time. That's the fact that that's why you're being told that no strategy is 100%, right? Yes, that strategy that's working for yes, it works. Just do your analysis, do your thing, right? and enter your trade with confidence, right? And allow the market to do what it has to do. But you just be aware that this doesn't happen all the time, right? No strategy is 100%. So most of the time, you receive price after the notice has happened, tap into your other block and activate your sell limit, right? Instead of price to just respect here and begin to go and apply, you see price will give stuff like this. All right, you see stuff like this. And when this happens, that simply means this your this your order has been taken out. And after being taken out, price still full down, right? So that I smash your TP. And when you begin to look at it, you regret, like I would have entered another trade, right? So that's the psychology battling with you now, right? That's the psychology battling with you. Even most of the time, when you see price break passing, you would think, oh, there's a change of character now, right? And then you, okay, let's push this that way. And then you begin to wait for your goal long, right? Now, because you have seen price break, and then you're not expecting for, right? Let me just do this. So when price came all the way, sorry, where is the patch to? At the time price came from all the way up here, activated this sell, and now you are being taken out. So you're not expecting for a price to give you a retest to this order block, and then you buy, right? But unfortunately, it didn't go that way, right? It didn't go that way, but this 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 just sorry, this is just what happened, right? Price took you out and then it still sold, right? Instead of taking you out and then here being a demand level for you buy, but instead it still came down and sold, right? So this is just liquidity. So it's all about learning how to avoid being trapped out in the market, right? Not, I will tell you how I do mine, right? But most of the time, what people do, they begin to increase. Okay, let me say you have a trading rule that you shouldn't risk more than 15 pips in your trade, and then when after placing your analysis, because of, oh, I don't want to be taken out, I don't want what it's really going to happen to me again. You're not risking 20 pips, you're not risking 25 pips, you're not risking 30. At the end of the day, if price take you out, it will still take you out, right? But most of the time, you get lucky. You might have your SF somewhere here, and price just come here and then it set down. You're like, wow, I didn't try, right? But I'm advising you just follow your trading rule. If your trading rule is 15 pips, fine. But most of the time, you must not really talk about how many pips you want to use. Let's say, let's assume that price has something like this. Yeah, let's assume the price has something like this. Like you will have price move down, 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 and then after having this change of character here, now you do your other block here. Now after doing your other block here, if you're going for a sell, what I do most time is to ensure that my XL is above this swing high. I will draw it just this way. So let's remove the bites and then focus on this. Let's remove all this. So we are talking about this now, right? So I have seen the change of character, right? Happen here, and then I was expecting price to activate me here. Now I'm also seeing another high here, like, which might be a strong reason that price might begin to sell. So what do? I place my SL above it, right? And I can see price respect it, and then it sells down. So all this I will show you in the main chart. I will show you some analysis I have made that this have happened, right? So that's that whole the equal highs liquidity. That is when you talk about the double. No? Okay. So what I'm saying, this example of how equal high liquidity happen, right? And I'll give you one example of how I do avoid it. Now, another example you can actually do avoid it is, let's apart from situation of maybe we have news event, right? I know how news happens, it's just a spike down, right? But situation of price moving normally, look at what I just do, right? Now, I've observed a change of character here. It just begin another patch too. So what I do is allow price to activate here, right? So let me just do this stuff somewhere neat. So let's assume that this order block came up here. So after having this change of character here, what I this allow price to tap into my order block, right? Now, if it sells down, if it's actually within the order block, right? If it sells down, and then upon this retest, if it doesn't retest above this previous higher height as made here, if it comes below it and then begin to go down again, most of the time I wait for it to break the structure directly. Once I see it going down, that passing is up, I will just enter start execution. Most of the time, I will just have it go below this previous lower lows. Right, it have dropped here. Then I will have my trade enter. See what I'm saying? Most of the time, I allow price break break out here, right? Break it out, right? Then I will confirm that you're not having lower lows, lower highs, lower lows, lower highs, and then I enter my trade, right? So that's uh, how I avoid trading the equal highs liquidity. So same applies to equal loss liquidity, right? When you say equal loss, now you're talking about just the other way run, right? So I just take my time. I told you guys I will take my time to explain this because not every yeah, just not every one will actually explain this to you. So I will take my time, no matter how long it's gonna be, to explain it. All right. Okay. So we have our pass through again. Now we have price moving in this pattern, right? Moving in this pattern, and then at the time we have a change of character. Now, on observing this change of character, we draw our double block, right? Now, what I will take this up. So we draw our other block here. Talking about after we observe the change of character, we draw other block, expecting that price will just tap in here and respect this, right? So but unfortunately, I'm talking about when there is liquidity coming now. Unfortunately, price comes in here and it didn't respect it, it goes below it. I just do it happen on that of buy slide liquidity. So this is what happens in sell slide liquidity. So there is no need to explain the whole process again. This is how it will happen. So you take it out and price still go to your direction, right? Price still go to your direction. So next we have line is the trend line liquidity, right? Trend line liquidity, especially for those who do use trend line in making their analysis, making their confirmations. Right? Just like myself, I use trend line a lot. I use trend line a lot. So we'll be using the trend line on the downtrend. First of all, you should know when you talk about trend line, you need market that is trending, actually trending, has a direction, it has an uptrend or a downtrend. So we using a downtrend. Huh? Yeah. Okay. Let's solve this. Now you seeing this price giving you something like this, a lower low, lower highs, lower lows, lower highs. Now you have drawn your trend line. You draw your trend line from this highs, lower highs. You do it this way, right? Expecting price to expect. Okay. Let me just make this white. Let me make this white. Okay, so when you have a price give you something like this, you're going to be happy. You are having a clear trend, right? You're having a clear downtrend, and you begin to have catching up to 30 pips or 30 pips. Now, let's assume we have price at this, right? So let us simply use this. We have this, we have the correct price, market price, this, and now we come in here during our other block. I don't know how you're meant to also to draw your other block. So we are assuming that when price taps into this trend line, you will sell again, right? So you would have your other block just this way, right? The price should come in here and be safe. But unfortunately, price comes this way. Oh, gosh. Unfortunately for you, price comes this way, right? He broke this trend line, he took you out. Because obviously you having your exit just above this trend line, but price took it out and then still sold down, right? Let me tell you two things here now. First of all, you can see that price still respected this previous high at this year. He didn't break past it. That's one, right? He didn't break past it. Now it's still sold down, right? Now that doesn't make your trend line to be invalid again. That doesn't give you a guarantee to come and that is your trend line to place up on this top. No, I lied. This is just liquidity, trend line liquidity that just happened, right? And another thing that will happen is you seeing this break, right? You seeing this break, you have this break, and then on point is a retest to this trend line, which is still the same as other block, you should buy, right? Now, when you do that, when you buy here, price still came here, you took it out when you buy. Yeah, that's what the frustration comes in because you don't always have to see if this high that they say, price take it out. No, price take this high out. But the fact that this high still remains, still keep on watching for yourself until there is a clear break of this structure up. I can actually have a buy order here. That doesn't give you a guarantee, but I can still take it out, giving a break of the structure. So I'm just telling you how trend line liquidity happens. So because this point of thing is just a game of probability, right? Learn what works, right? Do it, but just be aware that it doesn't work all the time, right? So this is what trend line liquidity looks like. Because have that in this a downtrend, also have that in an uptrend, right? The market that is moving up, right? So that is for trend line liquidity. Then here you also have the buy slide liquidity. So I will also come to that. So I think we'll be done on a one video. You don't know if you want the full course of liquid and everything, how to market structure, order block, liquidity, how to draw your, then you have to message us on WhatsApp to register for our mentorship, right? It doesn't cost much when you get there, you know. Now we have the buy slide liquidity and the sell slide liquidity. So we're taking the buy slide liquidity first. So prices have predicted this high and it's dropping this way. It's dropping this way. I'm trying to make some confirmation. Okay. All right. All right. So let's have this. Now, this is kind of looking like the double top liquidity, but no, it's not, right? This structure I'm giving you now is when that price respects that normal double top and double bottom, right? Now price is respecting it, right? But some people who trade long, right? There's what they call internal structure and external structure in the market, right? Avoid internal structures, they are just noise. Avoid them and look for, but that's where it comes into minimize your risk and maximize your target or your profit rather. Right? So now, that's what I'm saying. This time around, this trader now is not looking for a sell at this zone, right? If you're looking for a sell at this, you can see price starting and then slow down here. I made a good analysis here. But instead, this trader saw price drop this low, that's all, drop this low, a retested, and then dropping this next low, giving a break of structure. And then this trader was looking for price to retest again this maybe you do your order block from the last bullish candle and price dropped. So this trader is expecting something like this, right? Yes, he drew the order block and had this low short position. Sorry, I had low short position and obviously dropping the SL just above this high, right? Right. Then price came in there, activated your trade, and it sold down, right? Then it tested again. You might still make more interest. It sold down. Obviously, you'll be waiting for price to take your TP. Now, what happens there is some of the time, those who are not greedy, you just want to make a few profits, right? Some of them can be able to close this trade, right? Whereas some waiting for price to take that TP because obviously price is giving them the lower lows, lower highs, lower lows, lower highs, which is a clear market movement, right? Unfortunately for them, price takes out, right? Taking them out here. So this whole area, because the price took them out and so now this whole area, this way, this whole area is liquidity. I will just put a sign there because I'm quite sure you must have seen traders, sorry, do stuff like this on the chart. He must have once, let me remove this. He must have once or twice see stuff like this on traders chart, right? So this is a buy slide liquidity, right? A buy slide liquidity, price taking this out, right? Because you are looking for buys here. So, but when you see price, this is what my mentor told me, right? Trend towards the break, right? Yes, trend towards the break. You're seeing the lower low, lower highs. You break also to downwards. At end of the price, you have a change of power. So the next still remain high that price will drop, right? And then still set down. So instead of if you make this entry here, meet entering here, because once you enter here, you want to catch up about at 540, 50 pips, which from here to there should give you enough and you close. But if you are trying to enter here, then you want to still take that trade down here. But when the price take it out and then set down, and that's where the frustration comes in. So this is a buy slide liquidity, how it happens, right? Instead of selling here, you have it, have the other block during here, and then that's where you have this level of just straight, right? You understand? So this is how buy slide liquidity happen. Since it happens to the sell slide liquidity, let me move this away. Still be using this. Let me just still be using this. So for the sell slide liquidity, you have stuff like this, price dropping, and then begin to create higher highs, higher lows, higher highs, higher lows, and then unfortunately is here, and then boom, up here, up, up here. Now, since it happens, you have seen price up, down, higher highs, higher lows. Then you're doing your other block right here, the other block here, your long position, the price should tap into this my other block and give me my buy up, right? Maybe to this previous high that price has dropped in. But unfortunately, so you have the S there just slightly below the other block. But unfortunately, price took you out, right? So our price tapping in, gave you few pips. Now here, then a change of character and price is down, you're taking you out, then have this buy. You still see the buy, you begin to regret, right? Frustration comes in. So here you have, so this is the liquidity price created, which it had now swept out. So this is it, right? So that's the liquidity now, price have created and now swept up, right? So most of the time, when price starts at this liquidity, is mostly during this Asian section and see this section anyway. Yeah. Asian section comes at the night and there's this section at the early morning between 2 a.m. down to uh, 6 a.m., 7 a.m., then 8 a.m., then we have the London session. Now, this my mentee, there was he had something like this. He GBP he had something like price was actually on an option, right? Uptrend just this way. Right. So price dropped to a low here and wasn't able to build a structure. So and price dropped that low on during the session. So it's a London session. Oh, yeah, and okay. London potential price was dropping down here, right? And then he took a buy here. I just gave him a few pips and then swept him out to dead slow at and then bought, right? So two things have happened here now, right? Price have swept this by liquidity and also swept by this excess liquidity. Did you understand? This is in here. Sorry. What we have here is liquidity, right? And here too. Liquidity. And here. Liquidity, right? So you can see what happened here. Price swept, they say slide liquidity, and it's about the device slide liquidity, right? So you can now observe here to be an entire structure, which is not if you shouldn't trade, right? Avoid them. So I hope I have been able to clear out to you different kind of liquidity was really it touches all structures in the forex market, right? That is double top amount to trade, that is double top amount to trade, that your trend line you're using to trade, private liquidity of course everywhere. So you don't have to avoid it, right? So I have taught you how actually to avoid it. It's not about increasing your stop loss, your stop loss. It's just looking at what's happening, right? So if actually you want to, sometimes you might have price break this structure, price give this a move down, then build this structure. And you're like, how are you sure price can even get down to this zone again, right? So if you want to take a buy here, right? So that means if you're ready to risk it, right? Then having your asset, you do this, right? Like I told you, I do stuff like this. I will do stuff like this. I got my main chart. You see them? I will do stuff like this to ensure that at this previous low that I dropped here, my stop loss is below it. So even if it's not a value zone, when price starts into this here, which is the value zone, I will still not be taken out. I will have my buy. Right? But if you know you are trading a small account, you are managing what you are using and all that, then simply wait for price to go. Avoid the noise, right? Avoid the noise. Because most of the time, what makes you be taken out is that you might be having your trade might be running on 25 to 30 pips, and you're still having profits of $3, $4, $5, $7. Because you're trading a small account, you're using a small size. But don't get big account. This someone was using a lot size of 10, right? In the trade. And just few pips moves, even 10 pips moves, 20 pips moves, you're making hundreds, hundreds, 200, $300, right? And it's a good profit for me to close. If you satisfy closing, but you can't satisfy closing at a $6, $5. So that will makes you be taken out on the market. So I hope you get this clear. So let me just get you to my charts and you can see the stuff I have here. There is this particular analysis I will show you guys I made, right? On how I was able to avoid being taken out. So this trade I took today. So those on my WhatsApp, so I posted this. I gave the signal. All right, look at this trade. Don't know about this particular trade. This particular. Now, price was actually buying by giving the higher highs and those higher highs and those highs and those highs. I have this buy here, dip it again. Now, you can see this little box here. I actually wanted to buy another trade here, but price took me out. I mean, this video should be on my YouTube channel. Yeah. And I'll see here another value zone for price to buy, right? Now, I also saw this another value zone. Oh, okay, if price doesn't buy here, then it's buy here. So what happens is, I don't want to buy here after price is taking out and come and buy here again. What happens is, I will buy here and then have my S below this in the price of taking. I can see the dotted lines I drew. I have my on them. I have my essay. Like this about that was about 2 pips. Let me wait. Eh, That's about 2 pips below it. And price actually respected that. Right? Actually, you can see it. It doesn't take out. I have to be done with my profits just that way. So you should know how to avoid trading the valuation. Okay, just like I told you, all these trades like here, all of them actually noise, right? They're actually noise. Because if I wanted to avoid liquidity, all I have to do is just run out that block here. And let me show you. Another block would have been here, right? And I will have to expect price to target. I see what happens here, tap it here and then buy, right? But most of the time, I don't have to keep waiting for price to come here. At least a 15 minutes time frame. And another aspect of finding liquidity is trading on a smaller time frame, right? So, like I tell you guys, how I make my analysis is I find the major trend, right, from the monthly time frame, like the overall trend, then down to the 1 week time frame, I get the sorry, I can actually get the major trend from the multi time frame or the 1 week time frame, right? Now, as long as I'm seeing the clear view of the chart, or let me just show you on the previous. Let me get to my 1 week time. Then we see how I have this my analysis done. Right? The 1 week, right? So you can see it, right? So this trend line, this trend line you see here down here is on 1 week time frame. Then I will get down to my daily time frame to map up my key levels, right? You can see my key levels, key levels, key levels, key levels. These are zones that when price tapping, I be careful, right? If you are selling, let me assume you are selling down here, when price tapping here, you should be careful because I want to pull back or buy, just like it's happening here. Price go down here, it went up again, and then let's say, or hitting this my key level, you got to pull back again. So that's the barrier I have this one, right? So once price breaks it, I then retest to this my key level, then I have my long set. So on your daily time frame, your key levels, your 4 hours time frame, you find out the current trend, then go to 15 time frame and look for entry just that way. So I think that will be the end for this. So don't forget to subscribe, as I told you before. Now for our mentorship, and look for our number on any on this video on the description or something, and the message on WhatsApp or mentorship. If you want to get our trading robots, price is actually increasing, getting higher every day, but it worth it, right? Worth it. You buy again, if it's still a bonus from us to start trading, you can sell it also for trading robots. If you want our signal subscription, our signal services, we also give you payments readouts, you message us, and added in the group after making your payment and all that. So if you want account management, we also run account management for you, a minimum of $100 and above, where you get paid monthly. So that will be all